What is going on, traders? Welcome back to the Traveling Trader. Happy Wednesday to you. Looking at the cryptocurrency market cap, you see that we're currently at 267.5 bill. We keep going back and forth between 250, 280 bill, and not really able to get to that $300 billion threshold that we saw when Bitcoin was trading just under $14,000 a few days ago. It seems like forever ago, but yeah. So looking at some of the gains that the market has made in the last week, in the top alts, there aren't many that have had double-digit gains. You really only have EOS that's up almost 13% in the last week, and Bitcoin SV, which is up 37.5% in the last week. Other than that, I mean, you have Tezos that's up 17%, but in the top 20, those are the only three that have really had major gains in the last week. Other than that, the market is actually pretty stagnant. So if we take a look at what's going on with Bitcoin at the moment, what is going on with Bitcoin at the moment? Well, you see that in the short term, we are definitely in bearish territory. Now, I always talk about market confluence. Confluence is just a fancy word for getting confirmation from a collection of indicators and or time frames, right? So you basically want to, in order to make decisions on whether to buy or sell, you want to get as many indicators that are telling you the same thing and giving you a buy or a sell signal, and that's how you get market confluence. So in this case, we have a double top, right? Initially, in July 10th, before we hit this high of the swing high of 13,000, this did look like a bull flag, right? You had the rally up, we had the peak hitting at 14,000, and you had these trend lines where we did have a bull flag. The bull flag was actually confirmed by, a break to the upside and hitting the resistance once again at around 13,000. But the bull flag quickly turned into a double top thereafter. Double top, as you know, is bearish. We had a decline, found some resistance just shy, or some support just shy of just below the 50 moving average, and now we are in a bear flag. Now let me pull up the fib retracement as well, and you'll see that we try to determine levels of support and resistance using a variety of indicators. You can go off of the pattern support and resistance, in this case the bear flag. The moving average can serve as support and resistance. You have the fib levels, you have historical levels, etc. And again, you're trying to get a confluence telling you the same thing. So we have a number of bearish indicators at the moment, and that is, if you've been watching the channel for the last couple of weeks, that's how we knew that we were going to see a decline. And if you follow the Discord where I send out the trade alerts, if you want access to the trade alerts, link is in the description. I lay out exactly how I'm trading Bitcoin based off of these expected drops, and these drops were expected. And what I'm basically doing is buying at key levels for the long term. However, there's also a certain section of the portfolio that I'm swing trading based off of these levels. So in this case, when you have identifiable support and resistance that have been tested and retested multiple times, you can essentially buy at support and sell at resistance until that trend is broken. Remember, trend is your friend until the end. So until that trend ends, you can keep going to the well and taking advantage of these trends and these support and resistance levels and swing trading for profit multiple times. So in this case, you look at the bear flag that Bitcoin is forming, and it looks like it is now confirming the bear flag, and a confirmation of a bearish pattern is obviously a break to the downside. So it looks like we're confirming that. And where are we headed? Well, in this case, if we do break to the downside, there is immediate support at this level here, which is at around almost 9,100, right? This is where Bitcoin bounced off of last time. And then you have the support at 8,500, between 85 and 8,600, which is the 0.5 fib level, as well as the 100-day moving average, which is this yellow line here. So this right here is a confluence where you have the moving average as well as the fib level telling you that this is a key support level, right? So I personally think that this bear flag is going to be confirmed, and we will see downside action to at least 9,100 in the short term, if not around 8,500. And a few things are telling me this. Well, this bounce from 9,100 to the swing high of around 11,100, this was accompanied by declining volume. This is something that you never want to see. And I don't think traders, especially new traders and anti-technical analysis crypto YouTubers, I won't name any names, but I don't think the volume is something that people pay attention to as much. So when you have an incline in price like this, especially a bounce, right, where it's flirting with providing a reversal signal, this is something you don't want to see. This is a type of divergence, right, where you have essentially the volume making lower highs and the price making higher highs. This is called bearish divergence, and this is something you do not want to see. So that tells me that momentum is weak, right? And if you look at the histogram of the MACD, again, something that I don't think enough traders look at, they just look at the MACD itself. But if you look at the histogram of the MACD, you'll see that it is making taller bars after contracting a bit, right? You see that it was contracting. It looked like we were getting shorter bars on the histogram and potentially a reversal to the green. But we then, after this bounce with weak volume, are now seeing taller red bars on the histogram, meaning momentum is weakening. So I do think we'll hit at least 9,100, and I did send out trade alerts for this level. Again, access to the trade alerts link is in the description. You also get the stock trade alerts for the diamond traders and above, and you also are automatically entered, if you're diamond and above, into the 0.03 Bitcoin drawing that I do on the first of every month. What is the date now? We're nearing that. So in 7 days, I'll be doing a 0.03 Bitcoin drawing. So look out for that and sign up if you want to be included in that. Looking at Bitcoin on the 1 week, this level, obviously, we've talked about it to death now, but definitely a key level based on historical resistance at this level for around 7 weeks, coming down from the bull rally that we saw in end of 2017. So it is not out of line that we see resistance here. What are the key levels on the 1 week? Well, let's pull up a fib retracement, because obviously you can just point to historical key levels. So the first thing that I would do is look at, before we pull up a fib retracement, you'll see that below this, we did see some resistance at this level as well. And this was at around 9,600, where we're at currently, right? So if we break through this, then this level becomes resistance, right? Right now it's support, but this level will become resistance. And the next potential level that we see is at around 8,600. Well, guess what? You now have confluence, right? We could have easily just, if we didn't know how to identify key levels, key historical levels, we could have easily just picked one of the moving averages and said, hey, this is a historical level, this is a potential support level. Let's just stick with 8,000 because that's where the 21-week EMA is. But no, as a technical analyst, you're looking for confluence. So this between this 8,500 and 8,600 level is, you guessed it, the same level that we see here on the 0.5 fib and the 100-day moving average on the daily. So there you go. That is your confluence. That tells you that if we do breach this historical key resistance level, which is currently acting as support at around 9,600, that the next logical level down, after on the daily, after the 9,100 where we bounced off of last time, is this between 85 and 8,600, right? And you do have confirmation on multiple time frames now. So that should serve as a solid indicator that is a key level. Now, that doesn't mean that everything that we see on the charts is a certainty, but you have two choices. Would you rather enter the market willy-nilly at random and just FOMO into everything that's climbing? Or would you rather base your trades off of analysis and probable moves? Not certain moves, but probable moves, right? Which one do you think has a better chance of succeeding? Which one do you think has a better chance of making your portfolio profit? I don't need to tell you because you already know. So if we pull up the fib retracement on the 1 week, you'll see if we try to get a confluence of levels here, you'll see that this level that I talked about between 8,500 and 8,600 is also the 0.5 on the weekly. So there you have it. This is a key level here. If we breach 9,100, this is the level that I will definitely be looking to buy back at. One more thing I wanted to point out, if you look at the monthly, right? So let me just remove all these drawing tools real quick. But if you look at the monthly, it's not, I think that people, if you just question or query a bunch of crypto enthusiasts or crypto YouTubers, and you say, do you think that we've been rather bullish or bearish lately? Because of recency bias, the recent sentiment is that we've been bearish, right? But if you actually look at the monthly, we've had 5 green months in a row. This is the first red month, right? 5 months in a row. That does not typically happen. If you look at Bitstamp's chart, which goes all the way back to August 2011, that hasn't happened many times. You have, April 2012, 1, 2, 3, 4, 5, 6 green candles in a row, and then November 2012 you have 1, 2, 3, 4, 5, 6 again, and then it hasn't happened for a while. And then back in in 2017 at the start of the bull rally of 1, 2, 3, 4, 5. That's it. It's happened 3 times in the past, and now this is the 4th. So, rarely do you see a 5 or 6 month pattern not end or not have a red candle succeeding it. So it's only expected that we see a red month, and July, for all intents and purposes, is looking to be a red month after 5 green months. So keep long-term perspective. Always look at long-term charts when you are doing your analysis, to keep you in line on what is realistically going on over the long term, so you're not affected by recency bias and revisionist history. We had 5 green months. We're still above the 21 monthly EMA here, this white line. The MACD still has a positive crossover. The histogram on the MACD is still bullish. I'm not really fretting this market. All right, on to the stock side. So a few stock trade alerts that were successful over the last few weeks or so. The SPY, as I predicted, is now over $300 following the S&P 500's path. And I do think that the markets as of July 31st, if the Fed cuts the rate, will just take off, and we'll see another rally to establish crazier all-time highs. Microsoft hit an all-time high. We're now up around 6% on Microsoft. FedEx rallying really well today. We're up 9% on FedEx. Boeing took a major hit. Reports $2.9 billion quarterly loss, the worst quarterly loss Boeing ever reported, and then that's after obviously the 737 MAX planes, a couple of them being downed, killing all passengers on board. Boeing reported a second quarter loss of $5.82 a share. I did buy Boeing put options a few days ago, after not only due to the fact that earnings were expected to be missed because of the 737 MAX issues, but this right here is a key resistance level, right? This stuff doesn't only apply to crypto. You'll see here, this is a key resistance level going all the way back to May 2019. And if you even take it just a step up, going all the way back to April 2019, you have this key resistance level. So even if you didn't know about the news or how the news of Boeing 737 MAX would affect earnings, because earnings come out on this day, you could essentially just trade this resistance level. So buying put options is almost the same thing as shorting a stock. You're betting on the stock to go down. And we are now seeing an attempt to move past the 200 daily moving average, which is this green line, towards the 50 daily moving average. But I'm going to close out my option for profit, because I don't want to get too greedy, and a lot of times you'll see the effect of earnings reports quickly overturned. So anyway, that is it for this video. Subscribe to the channel if you haven't done so already. Leave a thumbs up if you got anything out of this video. It goes a long way. Leave a comment if you have a comment, question, agreement, disagreement. Sign up if you want access to the trade alerts. Again, 0.03 drawing at the first of every month for the diamond traders and above. So sign up if you want access to that. Link is in the description. And if you need help with your technical analysis, if all this looks like Chinese to you, or you want to take your game to the next level and you want one-on-one consultation with me, I have 2 spots left for August. So sign up to the Centurion level on the Patreon. Link is in the description. And we do those one-on-one sessions over video conference. You get 3 of them a month. They're 1 hour each. I think it's a great deal. And I wish I had a mentor when I started trading almost 19 years ago. Shit, I wish I had TradingView when I started trading 19 years ago. Stay safe out there, traders. Peace.